what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year.
Oh, yeah. Good morning, everybody. Welcome to the morning show here on Stock Market TV. Got a lot to get to today, so no time to waste. David Cox is our guest. He'll be on at 9. He's a portfolio manager at Raymond James. We'll have Kenny Glick come on just for like 5 minutes at 9:30. We'll have Sean McLaughlin on to talk options after that. We got some 13Fs. We got some earnings. We got some moves. We're going to count the reasons to be bullish or bearish, or I suppose neither. And yeah, that's the deal. So go ahead, smash the like, and here we go.
Good morning. Guess who loves Philly? Who loves Philly?
How was the game?
Dude, it was fantastic. We won. Morgan was into it. My wife was actually into the game because we had like this obnoxious like Philly lady behind us, and she was so obnoxious that Morgan was actually rooting for the Heat just to piss her off.
I feel like that probably happens a lot at Philly sporting events.
No, Philly gets a lot of hate. I was treated so nicely yesterday, even at the Eagles game, Dolphins-Eagles on a Sunday night where everybody was drunk. This was like in October or something. Some friendly, banter, but not bad. Philly gets a bad rap. It's those Buffalo fans that are the worst people on earth. The Philly fans aren't bad. Not bad. Went to a great steakhouse called, what's it called? Barclay Prime. Barclay Prime. Next time you're in Philly, go check it out. Sat right at the bar. Had a little ribeye. It was very nice.
Is that Charles Barkley's Steakhouse?
I doubt it.
Oh, okay.
It was spelled Barclay, like the arena.
Barclay, like the Brooklyn arena.
Oh, wait.
Barclay.
Oh, really? Oh, okay.
My buddy's from Philly, so I was texting him. I was like, "Hey, what's a good pregame before the game?" He's like, "Get steaks." It was good, awesome, great time. Drove back. I stayed there last night. Drove back in this morning. All good.
You did end up staying.
I did end up staying. I was trying to convince my wife to stay. She didn't want to, and like last minute, she's like, "Are we staying or what?" I was like, "Yeah."
Hotels tonight.
She was actually looking at hotels tonight, but we always just stay at the same place. So,
all right, let's talk about the market here. We got a lot going on.
Do we?
Yeah.
All right, so go.
You say a lot going on. I think it's a lot of the same. No.
Well,
I'm not
maybe
sure
so.
What's going on.
Maybe so, but
what is it? That's a lot that's going on.
There's a lot that's on our. The doc is full this morning. Put it that way.
I didn't see the doc. Do we?
The
doc is full.
Strazza and I don't look at the doc.
I know.
Maybe if you sent it to us, we'd take a look. Probably not though. Strazza, I really enjoyed our discussion yesterday in our meeting about like the checklist of positives for this market. I found it funny that it was hard to come up with a list. There aren't that many positive things. As we started thinking through it, we were thinking of potentially positive things that could trigger potentially, right? So then the list got longer.
So we'll get into it, but I like the potential ones more. Like I want to see, I want to see those kinds of charts prove themselves more than I want to see like something like semis or home builders hold their prior cycle highs at this point.
Yeah. I liked a lot of the conversation that we had about some of these sectors, like in industry groups, like home builders consolidating sideways, financials consolidating sideways, Meta, another good example. You brought up Netflix, another good example. Like these are sideways consolidations in key industry groups, key sectors, key stocks, right? And the resolution. Look at this chart. Great chart. It definitely wasn't Spencer who made this, or Strazza. This is a Fonz chart, I bet, right?
This is Fonz. This is excellent. And this, while while it won't show up on the checklist, this is like a checklist in and of itself.
Yeah, I love this. I love JP Morgan as a representation for financials. If you look at the XLF, it looks the same. Meta as a representation for communications is probably a stretch. But Netflix and Meta look exactly the same. Two big components in communication, so maybe it's not too much of a stretch. Amazon representing consumer discretionary, certainly not a stretch. You made that point at length yesterday. I agree. AMD for the weak semis, for the weaker semis, right?
It's middle
of the road. All right, that's fair.
Yeah, middle of the road.
Middle of the road semis. Yeah, not the best, not the worst. Middle of the road. All right, that's fair.
Because if you were to bench AMD against anything besides the semi index, it would be a leader. You know what I'm saying? Like it's not a leader within semis, but it's a market leader.
That's fair. Yep. Yep.
So what's your favorite one?
What's my favorite one? My favorite positive one. My favorite positive characteristic of this market.
What's the most important to you on this list?
I think it's the new lows list. I think it's the new lows list because it comes back to math, right?
Go back up.
Throw the new lows list. Throw the New York Stock Exchange new lows list. This has been front and center for me. I think it continues to be. If you're bullish on this market, you think the stock market's going to go higher. You want to see these red lines down there below continuing to decline. So this is the percentage of stocks hitting new 10-day lows, right? So like you see people, which I find really weird, when you see people subtracting the new 52-week lows list from the new 52-week highs list, which is really weird because there's nothing going on in the new 52-week lows list, right? It's like looking at the new 52-week lows list is like getting like one caviar egg or like two caviar eggs, right? Like that's not going to work, right? So give me two, give me three. I'm still not going to taste anything, right? I need a whole bunch to put it in Strazza parlance. Is that a good comparison?
What do net new highs have to do with caviar?
Because like
you're making me
there's no new lows happening, right? No new 52-week lows list, right? So it's like the new 52-week lows is like getting one little caviar egg or two little caviar eggs. You're not going to taste anything.
Well, you know how I know it's definitely a new bull market as it relates to the new lows list right now?
What?
Worst stocks are the defensive ones.
Yep. Low volatility. That's right. That's right.
Like maybe like an agriculture or chemicals name slips in there. So you know what I mean? But it's like the staples, the utilities, like these are the best looking shorts.
Yeah. So we shorted Hormel yesterday, for example, right? Good example. So this is probably the one that's most intriguing to me because this is for the bulls, this is for the bears, this is for the neutrals, right? If you're bearish the stock market, you're looking for an expansion in this list. We have not seen that. If you're bullish on this stock market, you do not want to see an expansion of this list, and you haven't seen it yet. Another good one that you don't seem to be too fond of. Slide 5 there, Spencer. I think this is a big one. I'm old enough to remember when people used to, acknowledge Apple as an important stock, right? A market bellwether, biggest company in the world, et cetera, et cetera. Conveniently, these days, it's people are completely just ignoring it. To me, Apple is a market bellwether. It is a technology bellwether. It's a lot of things, right? And we're making new lows on a relative basis. Looks pretty nasty. Looks like, honestly, it looks a lot like financials in 2007. Right. I'm not saying that this is going to be a great financial crisis for tech. That's not what I'm saying. What I'm saying is the relative strength in Bear Stearns, in Lehman Brothers, and all of these. And again, I'm not saying that this is Bear Stearns and Lehman Brothers. I'm just telling everybody what those looked like back then. We're like, well, the great financial crisis came out of nowhere. It's like, no, they peaked, particularly on a relative basis, well before 06, if I'm not mistaken. This looks a lot like that. If Apple breaks 180, it's a short.
Great. Fine. So Apple's a short below 180. Agreed. But what is this really? Like, what do we do with this information? So you look at this chart. Does it tell you, is it bearish information about the large cap weighted indexes? or is this bearish information for the stock
I think
market?
both probably, right?
So the market of stocks likely struggles in an environment where Apple is below 180,
Yeah, I think so.
not just the large cap indexes because Apple's such a large weighting.
It's a market bellwether. I mean, I think that there's a lot of information here. So not only can we short it if it's below 180, but I think that there's a lot of information there as well. No? You don't
All
think
right.
so?
I mean, I'm with you on two out of three.
Okay, so which 2 out of 3 are you with me?
It obviously will weigh on the indexes, right?
That's just math, right? 6.6% of the S&P, and what is it, like 12 of the Qs?
Yeah, I think
Something
so.
like
Yeah,
that. I'll tell you right now.
you could short it. Here, number 2. You could
Oh no,
short
it's
it
only
below
it's only
180.
8.6% of the Qs. It's less than I thought.
Okay, listen. Second one I agree with is you could short it below 180.
Yeah.
Right. This is like the relative trend here.
It's a
These are the
straight
types of
shot to the
stocks.
low 160s at best, probably much lower, right?
Yeah, fine. And there's like there's a lot there that you could get behind, right? This has been a leader profit taking. Maybe we start to see it. The Magnificent Seven cools off. This one's already been cooling off, so I like that.
Uncle
What
Warren trimmed a little, non-event, right?
No, but we'll talk about the Fs. The part I don't agree with is that Apple gives you any sort of read on the broader market.
You don't think so?
Right?
You don't think so?
Apple almost no. It's such a bellwether. It's almost like you lose that kind of information. A lot of these institutions treat Apple almost like a cash vehicle.
Yeah.
It's strange. So I don't want to overthink it. And also, their business, Apple's business is Apple's business. It has nothing to do with anybody else's business. Nobody else is like Apple, right? You might be able to look at Apple's earnings and say, "Oh, okay, this is great," and like read into some of the supply chain names like Skyworks or whoever's supplying them chips these days. But to be like, "Oh, Apple had a bad quarter," that means Amazon and Google and the others are going to struggle. Totally different.
Yeah. I don't know. I think it's an important. I think if Apple's ripping, breaking out to new highs, I think that's a positive for the overall market. If Apple's struggling and breaking down to new lows, like I just, regardless, like yes, I want to be short Apple if it breaks below 180. Yes, and we can all agree with that. I think like unanimously we agree. I think you're underappreciating its importance. That's all.
It got to a sky high valuation.
Oh,
for
here we
$3
go.
trillion.
Whatever.
So doesn't surprise me. Listen, we've been saying I was not a fan of Apple late last year. However, the bull market checklist, I don't really need this. But I think, it's overwhelmingly green. I think it stays green. What do we need for you to stop wanting to sell stocks?
When our shorts stop working,
No.
I mean, listen, Lulu.
Look,
I'm not going to get into.
this
I'm
is
not going to get into the
opportunity
names. The index shorts have not worked. The individual shorts have, or are flat.
All right. Okay.
Why are you rolling your eyes?
I'm not. I'm a little disappointed.
Disappointed in what?
You're fighting the tape out.
Fighting what tape?
Stocks are doing great.
Okay, so we shorted Hormel yesterday. You didn't seem to have a problem with that.
We should be putting on risk reversals, looking for new ponds to
risk
fish.
reversals. Is volatility high enough for a risk reversal though?
I put a risky on AMD yesterday.
Ooh, did you?
Yeah.
Ooh. And
you're talking shit about my new position, calling it a laggard out here, making me think twice.
No, you made a good point. You made a good point because it's easy to call it a laggard because we're comparing it to other semis. So it's hard not to be a laggard in semis, right? But you made a good point that it's not a laggard and it's not a leader, somewhere in the middle. That's right. I agreed with that.
And here's what I like about this one. I know, Fonz, we have the chart somewhere in one of these decks. We were talking about it yesterday on Hot Corner. What I like about AMD is, if I'm wrong, I'll probably know real soon because this little coil is going to resolve lower and I'm going to be out with minimal damage. And if I'm right, then we probably look back in a quarter or two and say, oh, AMD, when it was taking out those prior cycle highs, of course it was going to end up looking like NVIDIA or Broadcom or any of the other ones that broke out from similar patterns like this, right? That are hitting 1, 2, going on 3 price targets by now. So that's the bet I'm making.
Yeah.
So it's very well defined. That's why I like it.
Yeah. Listen, I'm all for putting on longs or shorts. I have felt as though the market has been deteriorating. It's funny because before it was like, all right, JC, permabull, what's it going to take to get bearish? I'm like, well, when stocks stop, when more stocks stop going up, right? When we get breadth deterioration, when you get dollar strength, when you start to see these things, and we got those things. Now it's like, well, JC, what is it going to take for you to get bullish? Well, when more stocks start going up again, when we start to get the stuff we were seeing last year, right?
We're going up. We're getting that expansion. How much do you need? Like, what'll do it, I guess, is what I'm asking. Is there a level, or is it's going to be one of the breadth indicators?
I honestly, I think it gets back to the generals. The industrials are the generals. It's not tech. I don't, tech is like its own beast. Great, big component, largest component, all those things. I think it comes back to industrials. I'm glad we have David Cox on the show today because it's not just American industrials, it's Canadian industrials, it's European industrials, it's Japanese industrials. Like all these economies, all these countries have a ton of exposure to industrials, a lot more so, 3-4 times as much as the United States. So as important as I'm talking about industrials in the United States, it's way more important around the world, I think.
But are you what's your measuring stick? Is it XLI? Because then
XLI is one of them, Caterpillar, Honeywell, those bellwethers, the individual industry groups, funds. We should do an update on the industrials industry groups, go one by one and drop those charts in the Slack for me, please.
How about the candle in XLI?
Oh,
yesterday?
I saw. I was also impressed with the small cap candle as well. In
nice follow through, Bears.
Hey, come on now. All right. Let's go. I have a good chart for you. Can you throw up just this is the one that I find really interesting. And we brought it up a lot. And bull market, bear market, long, short, if you've known me for a long time, you know that it's hard for me to have a real conversation about the stock market without talking about the bond market. Can you throw up new slide 2, please, Spencer? So here's my question, right? It's one of 3 things. Does the bond market catch up to stocks? Does the stock market catch down to bonds? Or has this relationship changed?
I have a great TLT chart. It's bonds are going to catch back. Bonds are catching back right now.
Rates fall apart.
Rates are going to fail at this 2022 high. And if you zoom in on TLT,
did you see my Slack message about adding the 10-year to the list?
Yeah,
I figured you'd agree with that.
Listen, I don't need the list, but yes, it's too green. I don't think it's not mixed enough to need a list.
I think it is. I think it is mixed. That's why we made the list. That's how we made the list. And we agreed. And by the way, you and I agreed wholeheartedly across the board on that list. And I really like adding the US 10-year yield. What did I say? 4.15? 4.15? Is that it? 4.15.
No, I like making lists. I agree.
Ooh, here we go. Here we go now. Here we go.
I agree with everything that's on the list and the thought process around it. I don't think we need a list right now. I think it's a mistake to not be staying long. You know how I feel.
I do. But we make lists. And we've done it for a long time. And this is a great list. By the way, why did the altcoin index not make the cut? Did you guys cut it at the end?
People just don't listen to me, I guess.
I gave in and I said, all right, give it to Strazza. Throw the altcoin index in there. God, bonds. But I think you're double dipping on the Bitcoin 47 and the altcoin index. To me, you're getting the same information. So it's not necessary.
Fine. And you're probably right. But what if you're not? Right? The altcoin index might show you something.
Is that the bet you're making? Right.
No. But here's the point. When we make lists like this, making them too long is never a mistake because all you do it, you don't need it to be 100%.
All right, here we go. 2
direction.
seconds ago, you said we didn't need a list. Now you're saying the list isn't long enough. Like, which you can't have it both ways.
No, I think I've been very clear. There's no reason for a list right now. But when I do make lists, I like.
How about
long
the Zloty
lists.
making the list? How many lists do you think are out there where the Zloty makes the cut? Probably not a lot.
No, the Zloty should be on more lists.
The Zloty is really just a representation of the dollar. It's really
is it resolving lower?
What?
Is it resolving lower or no?
Is the Zloty resolving lower? No, it's right there, right at the neckline from the head and shoulders.
So that could be failed breaky, just like this chart of Treasury bonds I'm about to show.
Yeah, maybe. Sure. If they are, it would likely happen simultaneously, right?
Failed breaky in the Zloty. We reverse mortgage the house. YOLO.
I mean, it's pretty. I mean, it's set up. You know, I'm not going to say it's not set up for that. I think if interest rates get the shit kicked out of them, and bonds rip, dollar falls, Zloty rips, right? That's the setup.
Yeah, check me out.
Chris Dawson is wondering why our helium is not on the bull list.
Helium's in our accounts.
That's right.
I
have a way. In fact, I actually messaged my helium guys this morning. I'm like, "How you doing, guys? Any updates?"
My IT guy does the helium stuff down here. He was texting me yesterday.
Dude, I have so many pollen coins and helium coins. I have coins of things I've never heard of. We're just mining all kinds of shit.
I weeded out a lot of the altcoin shit throughout the crypto
Dude,
bear.
The fact if you knew how much pollen I had and you can't even buy it, you have to go like on what's that Russian the Russian messaging app? What is it called? What's the Russian messaging app where they have to go do?
I don't hang out in the same strange dark corners of the internet.
Can someone help me? What's the Russian app?
The secret Russian
like Telegram?
Telegram, that's it. The Telegram. You have to go on Telegram to get the pollen. I don't know if you still do, but you did when we first started mining it.
All right, listen. On crypto, see my hat? You know what this
I do
is?
not. I can't see it. Can you zoom in there, Spencer?
What is that?
Galaxy Digital. Galaxy Digital. Speaking of crypto. So they are partnered with Invesco for one of the spot Bitcoins. So they were hanging out at the conference. I'm thinking of them because we're talking about crypto. That's BRPHF. That one looks good. That base is in. I think it's making new highs.
So very impressive. So I like how we included, and I do agree with this, Bitcoin above 47,000 is part of the bull market checklist. Can't be bearish. Can't be a bearish thing. How bullish is it? I don't know, but it's definitely not bearish, right? How about this? How about this for a signal? So this over the weekend, you had the Biden tweeting out with the laser eyes. That was one thing. But then, can you throw up slide 2 there, Spencer? How about this one? How about this one for a contrarian indicators, Strazza? This is the birthday card that my family gets me. Dad, some things I've learned about money. NFT is not short for Nifty. Bitcoin is not what happens when you cut a penny in half. And cryptocurrencies is not a tomb full of money. And then I don't have the card in front of me, but it was like, oh, but us loving daddy, something like that. But this is the card that my family gets me. Are they trying to tell me something?
That is so cute.
That's a great card. Great card. Tremendous.
My wife was very excited about the card. She's like, wait till you see the card we got you.
Some of these cards are so cool these days. You know what I'm talking about?
Yes.
What?
So can I show you? Can I show you a card I got the other day? I just had to get it. Okay. So at the farmer's market, they have these cool things. When you open it up, it's a beautiful tree. Look at that. This is like the prettiest cards. I had to get a bunch of them for my grandma.
How nice. How nice.
Yeah. And we're talking about cards over here. It's Valentine's Day. I was going to say something about the NVIDIA. Oh, TLT. Throw back up TLT. If this scoops and scores, JC, this isn't on the list, is it?
It is. The 10-year yield's on the list.
Okay. Oh, yeah. 415 and the 10. This is the same thing. So yeah, a little bear trap
Yep.
here. We hooked.
Yep. A bullish divergence on the momentum if that happens as well, by the way.
And I, don't kill me for saying it because I know it's 8:56, but based on pre-market action, it looks like we're back above this level to open today. So let's see where we close. But
yeah, let's do a quick little rundown. Dow futures up 70 points, about 18 basis points. S&P futures up 11 basis points, about 5 handles. Nasdaq futures up 10 basis points. So not much happened in equities. It's the bonds that are moving. 75 basis points on the 30-year futures, 2% on silver this morning, 0.5% on gold. Interesting, silver outperforming gold this morning. That's something to monitor. Up 1% on copper as well, as the dollar is falling today. Volatility index back down towards 14 on the VIX, and the U.S. 10-year yield right around 4.2%. So we're watching that very closely. And then in the old funny money, Zloty slightly up off the highs, but slightly up. And then in cryptocurrencies, what are we looking at? We're looking at Bitcoin up 400 points today, 52,300 for the Bitcoin. Ethereum up a little bit over 1% today, just above 2,800. Solana continuing to hang in there, very impressive, 116, down almost 1% on the day. Total crypto market cap, Strazza, $1.9 trillion. Wow. Did Bitcoin hit $1 trillion? Did I get that right? Did I see that? Yep, hit $1 trillion yesterday. Wow. Shout out to Bitcoin.
And these Bitcoin miners, dude, it's really wild. They're up like 90% here since the lows from just last week, like in literally like 5 trading days.
How are you? To me, I got to feed the ducks here as we're running into these former highs. If it goes higher, it goes higher. I'd rather let it set up. I'd rather respect this resistance and treat it as support in the future. Maybe, that's how I'm looking at it. What are you thinking?
Listen, I told everybody in the analyst meeting on our calls yesterday exactly what I did. I have no position right now.
Yeah,
you can't.
It's hard. It's hard to be long against that resistance. It's too hard. If it rips without me, then it rips without me. It's too hard. It's messy.
That was great. Listen,
yeah. And by the way, I'm gonna stick with my. Remember how I was pounding the table on Mara? I didn't trust it until it got above 21. I just didn't trust it. 2021. I know a lot of people were already dipping at 16, 17. That ended up working. For me and my old age, I'm more conservative. I needed to see it first, and I'm okay with that. And in hindsight, I still think that was right. I'm okay with that. I could have gotten a better price. I know a lot of you guys did. Good for you. I think you also, for that matter. I paid more. I paid more because I wanted to see it. I paid more.
If I was doing it through the common, I probably would have done it that way. I jumped it before it even broke and hooked back higher through that base breakout level, but I was just trading it through long calls going like 2-3 weeks out. So it was very high risk, high reward.
You get what you pay for in life. We went to Madison Square Garden a few weeks ago for the Heat-Knicks game. We were given tickets. The seats were not very good. They were fine, but they were in the 200s. The seats were fine, but they weren't the best seats. Yesterday, my wife and I go to another basketball game, this time in Philly, and they were way better seats. She paid for them, got them for me for my birthday. And she's like, wow, I can actually see the game now. Like, she was being a little bit obnoxious, but, you get what you pay for in life. And, we paid more. We got better seats. We got to see the game better, right? You pay for that. And for me in the market, like Apple, great example. Can I short Apple now? Sure. I mean, this is a free country. I could do anything I want. But the better trade would be to short it on a break below 180, right? It'll cost me more, theoretically, right? Mm-hmm. But I'll see it, right? So I'm willing to pay more. It's the same thing to me.
Yeah, like a lot of people will tell you, like, don't jump the entry. That's like a no. I think if you understand what you're doing, like, you can do different things.
You can do anything you want.
If you jump the entry, here's what that means to me. My probability of being right is lower now. But if I am right, I got a better entry. I'm going to make more money. And then I weigh those two things. Does it make sense? If I'm okay with it?
Also,
yeah, go for it, right?
I'll add to that. You can also enter multiple trades where, like, let's just say, I'm not going to do this, but let's just say I really wanted to be short Apple. I could short Apple now, and then on a break, I double the position or triple the position. So at least I have something. I'm not going to do that in this case, but I do think it's a good example. I could, right? And then add to the position on a break. Like in the Mara, I could have bought it 16, 17, and then added above 21. I could have done that. I didn't. I could have done that, right? So, I think you said it best. As long as you understand what it is that you're doing, right? Like yesterday, we put on a trade in Hormel. It's a long shot. It's a long shot, but I think it costs us 15 cents, right? It costs us 15 cents. So if we're wrong, if it's not even about being wrong. If the stock doesn't go down, then we lose 15 cents. But if we're right, we're going to make 10 times our money at least. So it's a low probability of success, but it's a great risk reward. In other cases, it's a really, really, really high probability of success, but we're never going to make a 10 bagger. We're just going to collect some income, like in the case of some of the spreads we put on sometimes, right? It's not going to change our lives, but it's a very high probability of success. There's a time and a place for everything, I think.
I think scaling in and also scaling out, like you just mentioned, right? So I think it's a best practice for most people most of the time. So you almost want to craft your setups for it, right? So what I'll do is I'll look for an initial level, like an entry level, and then I'll have a confirmation level, right? So, and by doing that, outlining two risk levels or two levels of interest, right? One where you want to get in, and then one where you have more conviction that the trade is working for you. Then all you do is, okay, 50% here, another 50% at the next one, right? That's an easy way to just start scaling into trades. And I think that it also, I found earlier on in my trading career, it helps psychologically. It's less of this all or nothing feeling that way, right? It's more incremental, like you're building towards something. So for me, that I think is helpful.
Can I bring on David Cox? I'm doing it.
Sure.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
David Cox.
How's it going, JC?
Are you my favorite Canadian? You might be my favorite Canadian.
Gee, generous. Appreciate it.
I have a lot.
How's it going?
I'm a big fan of a lot of Canadians.
Yeah.
You got to be up there. You, Justin Bieber. I think that's it. It's a big drop off after that.
Right. Well, you're generous, and I am going to tell you, I'm already going to miss you here when we off the continent next week.
Where you going?
You're coming, right? Yeah, I'm going.
Oh, you're going to Dubai?
Yeah.
Good for you, man.
Yeah, it should be good.
Dude, everybody's going. How come we're not going? Man, this sounds like a lot of fun.
Yeah, it should be. We'll miss you.
I know, that's a bummer. All right, well, I do enough shit. It's I got too many kids.
True.
Can't be going to Dubai.
No, I know. They're young too, I know.
At the other side of the world, I went to Philly yesterday. That's far enough.
Yeah.
So, Mr. Cox, I'm really happy that you're here on the show for a variety of reasons, but industrials to me are front and center. You Canadians love your industrials, right? It's not just it's not just junky gold miners up there, right? You got some banks, you got some industrials. Canadian industrials have been looking better than American industrials, and American industrials have looked great. And what I like about industrials is it's very highly correlated with the overall U.S. equities market. It's really important in Canada. It's really important in Europe. It's really important in Japan.
Yeah,
kind of a big deal.
Well, there's a bunch of dual listed names too, right? So
True.
I mean, some people might not even clue in. You got WCN, TRI, TFII, I think double listed, STN, Stantec. I mean, those are all names that are just in strong uptrends, right? I mean, Waste Connections broke out recently. I mean, the rails are rails. I think rails are a little bit, they've just come up, right? You got CP and CNR, which is CNI, I think in US. Yeah. But yeah, I mean, industrials are happening. I mean, to me, when I look at XLI versus the market, though, like it's still like we're whatever. It comes and goes almost, right? It's not as dominant, but there's a lot of names, and the names are working, right? So I'm with you.
And then when you look at like the German DAX, for example, to me, I would love to hear your thoughts on this. You're a open-minded, well-rounded individual, right? Regardless of what people say about you. Is the German DAX the most important index outside the United States, you think?
Yeah, no, I'd probably lean that way. Yeah, I mean, yeah, for sure. And you know what? I think I'm glad you brought the DAX up because I laugh because I think we've now had 2 times in the last 20 months we've had the recession comment, and I love it. The market trades at highs, and everyone's excited. They got the recession they all wanted, and unfortunately, those waited for it missed the rally. I think,
Is
right?
Germany officially in a recession? I didn't
I
get that memo.
I saw some headline 2 weeks ago. I
It
don't
must
know.
be
I
true
mean,
then.
well, whatever. I mean, I got other things to do than look into it. But I saw the headline flash.
Yeah.
I laughed. I printed the chart.
There you
Come
go.
on.
There you go.
Yeah.
Very cool. So technology is often viewed as a market bellwether, as like the generals. I'm in this cycle, this market, I'm going with industrials, Dave.
Yeah, well, I mean, I hear you. I think from a breadth stand, everyone talks about technology, and of course, the U.S. has such a big component. But I mean, that's not to say you can bet against it. I mean, there's some pretty strong groups. But no, I'm with you. I think the industrials are good. And you look at Caterpillar. I think Deere just reported. I think it's going to come off here this morning. But Caterpillar, I think looks great. ODFL, like a couple of the truckers are strong names.
Yeah, of
I don't know if you've ever looked at Eaton, ETN.
course.
I think it's a European. I mean, it's a great name.
It,
Like, it's
Eaton
just
is
in a
like one of those that's like I think it's like Ireland based, but I think they're
yeah.
from like Ohio or something. I think it's
Look,
one of
look, look at
those
the look
situations.
at the 10 or 15-year chart. I mean, like it's silly, right? Like it's
Yep.
crazy.
Yep. Beast.
It is what it is. Yeah.
Where in industrials are you focused on? I know Strazza's talked about we were in a meeting yesterday and we were looking at the materials industry groups, and like the only materials industry groups that actually looks good is like the building materials, which is more of an industrial.
Yeah.
Right?
Yeah. No, I hear you. Yeah, I hear you. I mean, it's just really name basis, right? So again, Waste Connections, I already brought it up. WCN, I mean, what's not to like, right? I don't know. Again, of course, it looks a little bit different in the Canadian dollar version, but they're both the same. I mean, it's in a strong uptrend, right? It really is. Stantec, I mean, as a engineering company, I mean, almost odd, right? But I mean, it sits in that same sector. I mean, pretty strong, to say the least. And I mean, what do you do? But I like the U.S. names because if you look at the relative strength, of course, I like to look at you plot weekly and daily relative strength versus the S&P because forget the TSX. I mean, it doesn't outperforming that doesn't mean much. And so if you look at it, I think the name recognition out of the U.S. names is better. I think Eaton is a better name than a couple of the Canadian names.
Yeah.
Of course, I can save a little bit on currency, in terms of sort of some risk, but. The reality is that yeah, you just go with the big long-term leaders, and they're pretty obvious, right? And it's not the garbage that we have in our market, like Air Canada or Bombardier, and like all this kind of rails and plane business. I mean, that's just not the place to be, right? Russell Metals, RUS, is another name here I think that's come up pretty nicely and is in a strong trend. So yeah, I mean, industrials in Canada are about 14% or so, so pretty hefty weight. But from an index standpoint, I don't even think about the TSX. I mean, to be honest, right? It's been underperforming for 14 years. So
Yeah,
it's
but underperforming the S&P 500 because Canadians don't have any technology up there. I mean, that's the story.
well,
It's not that Canadian stocks aren't doing well; it's that there's no tech.
I understand that. In fact, there is a name though that again I think every American must have on their screen. It's dual listed. It's DSGX, right? It's Descartes. So I mean that's the head office is like a stone's throw from here. Probably I hurt my arm throwing that far,
Uh,
but you know what I mean. Look
yeah,
at the trend. Like
it's
that's
a
a
big
great
base.
stock. And yeah, and it's a Canadian name. And then of course you got kind of recovering things like Shopify and everything. But yeah, you're right. The weightings are wrong, right? The dividend heavy stuff that the Toronto stock market has is not working. I don't think it works well in rates. What's happening, and at the same time, utilities obviously are brutal. And I mean, what an yeah. Let's move on.
That was good.
And energy, right? I mean, energy
Talk
comes
to me
and
about energy. That's
goes.
where I wanted to go next. Talk to me about energy. I don't know if have you been watching the Naki Slocky?
The Naki. What are you
The
talking
Naki
about? The
Saki,
Naki
the
Saki.
Norwegian krona and the Swedish krone.
Oh, gee, I should have plotted it after I heard you mention it yesterday, and no, I've not been watching it. Are you serious? I
This
need
one
to
has
watch
been
this.
spot on. Throw slide 2 here. This one has been spot on for a while. Quite the leader. So here's the Norwegian krona and the Swedish krone. And notice how it started picking up. last year
All right.
before crude oil started to outperform S&Ps. Started topping before crude oil started underperforming S&Ps, and now it's ripping higher. You know what I mean? It's a nice
Yeah,
barometer there.
I do. I'm going to tell you, I think the Canadian US dollar is a better barometer because I think if you actually look at the last 20 years, you'll see it also bottoms first and it also tops first. I think all the big tops are actually, I think it's a very good relationship. I don't have the chart with me, but plotting those
So
two. So, I
CAD
mean,
dollar,
the
CAD
Naki,
dollar. I'm
yeah, CAD
plotted
US.
over oil S&P ratio.
Yeah, plotted. Well, no, I just plotted
Oil
over
absolute.
oil. I mean, you'll see that, yeah, because it's sort of I don't know. I think there are signals, but I mean, from a crude oil standpoint, I heard you guys talking about this oil versus stocks yesterday. I mean, oil to me, looks legit in terms of at this area, right? I mean, it seems like a legitimate area here. Let's not get super negative. And so, back to your question, I mean, the energy stocks have been, pretty brutal. Aside from, the refiners are
Right.
pretty
That's
strong.
it.
I mean, obviously Valero and Phillips and Marathon. I mean, without question, strong. There's a couple of other niche names. Like, I mean, if you look at like YPF, that's got that Argentinian theme in there too, and that's a pretty good name that's sitting in a base. But so to me, there's your early leadership, and now the question is, does other stuff come along? But energy is just, I don't know. It unfortunately, I think from an investment standpoint, energy is such a. I think you have to really wear a trading hat. You can't try to like legitimately own the stuff. You can temporarily rent it for sure. But I think I don't know, it's just sketchy. The performance differentials are too big,
It,
right? They come and go.
David, what about tech here? You're kind enough to send us over some charts. We have Coinbase reporting earnings tonight. But just what do you think of like Nvidia, for example, right? Just every day with this thing.
Well, I think, okay, aside from, I mean, Nvidia is obviously huge, but like there's a lot of stocks that look incredible. Like I just look at this and I got to tell you, JC, only because I heard from two people, okay, a client and a non-client, to write me say, hey, JC's negative. Are you negative? And I'm like, what is this? Like so I look, of course I don't have time to read every comment, but I'm like, I've seen you being negative here, and it's like, I just don't see it. Okay, I don't see it. I think there's a lot of stocks that are behaving super well, and kind of the charts that are on the screen here are kind of your larger chunk. But if you look underneath at some of these growth names here that really got ruined, and I think I'm talking like look at ARK-F Holdings,
Mhm.
ARK-W Holdings. Those two ARK funds are full of they got the best relative strength of the group. And if you look in there at all these stocks, whether it's the Paths and the
Yeah.
Elastics and all these kind of names, they're behaving pretty well. I like this. There's ARK-F weekly chart. That's relative strength in the bottom versus the S&P. That's now above a level. I don't know. It's higher highs, higher lows, and there's a lot of good behavior in there. Because when I look at 2022, what was happening is you'd have these growth things. They'd break and then they'd fail. They'd break and they'd fail. But I think there's a whole lot of breakouts now that are
Yep.
not failing. And sure, the failures happen, right? But there's a lot of names, and I think they're behaving super well. And I think that's bullish.
Can you throw up? I want to hear your thoughts. You got a few more gray hairs than Steve Strazza, respectfully, David. Throw up the Apple relative one that we were looking at before. Making new lows on a relative basis. I'm looking to short Apple on a break below 180. But just from a market standpoint, you remember back in the day, David? You and I remember in the old days, people used to look to Apple as a bellwether, as a barometer for the market. It was kind of a big deal. So now, are we just pretending that it's not
Yep.
anymore, or is it actually not anymore?
No, okay. I have multiple thoughts on this. I mean, the one thought is that when it is what it is, and it's, let's say, coming down and making relative lows, and the market is fine. I think that's actually a pretty good point. It's the same thing with this whole Magnificent Seven kind of whole idea. It's like, okay, these stocks are driving the whole bus and whatnot. And when a market has underneath behavior happening here that is sort of, I think, really substantiating more to this market than at the stock level. I don't know if we have to care about Apple. I mean, you can care about it because from the perspective of relative strength, why would you want to own it? It's an opportunity cost. But at the same time, it's kind of alone amongst the big ones, right? It's not.
And
Sure, it's weak,
And
right?
Tesla, but I don't look at Tesla as like a
And
market
Tesla,
bellwether. It's like Tesla's like its own animal, right? Its own beast.
for sure,
Apple is a different
for sure.
beast.
I mean, thankfully we can all look at charts, and I think just what you're doing right there, I think that's what everyone should be doing, right? You have your absolute trend, you have your relative trend, and what are the best trends?
Sure.
Both. Like, why not be greedy? Look at like cybersecurity stocks, like
Yeah.
unbelievable, right? I mean, look at them.
Been
I mean, it's just
unbelievable.
crazy. Oh, they're just unbelievable. And like, what does it mean? I was looking at CrowdStrike yesterday, right? And it's such an incredible name. And the PE is 48. Like, who cares? I mean,
PE.
it doesn't. To me, it doesn't matter. No, but some people kind of go and what I mean. I was at a CFA presentation in Toronto a couple months ago, and of course, people are like, oh, it's a 50. It's like, look at the 50. The trend of some of these things is so incredible. The synopsis and cadences, those are unbelievable names. And so it
I
doesn't
think
matter
a great quote. Rest in peace, Alan Shaw, a mentor to many of us, passed a couple of weeks ago. One of his great quotes was that in bull markets, stocks are expensive and they get more expensive. And in bear markets, stocks are cheap and they get cheaper. Right. So,
Yeah,
I
for
just
sure.
never saw the point in diluting something as pure and factual as price with something as arbitrary as an earnings estimate. It seems
Yeah,
silly to me.
no, for sure,
That's like it's
for
like
sure.
putting
But that,
ketchup on your ribeye. Like why would you
yeah.
do that?
Oh,
It's like,
or having it well
or
done. I
like putting
mean, yeah,
orange juice in your champagne. Like, oh, what kind of serial killer would
yeah,
do that? Oh,
yeah. Trend following works, but that I think that's the issue, right? Is that there's a lot of people that kind of you start to like, okay, maybe I didn't have enough tack, and you know what I mean. You peeled it off early, but the trends are there. So I think you have to be pretty careful. I mean, this market, I don't know. I mean, I haven't really seen a lot of broad data, but I mean, it's a tricky market from the perspective of I think it's fair to say last year, right? The market had a pretty strong year.
it was impossible to be
But
bearish last year, but people kept finding a way. David, they found a
for
way.
sure. For sure. And now you're finding a way right now, and I appreciate that. But at the same time, I just like I don't see it yet. I think price has to confirm, and I just haven't seen enough. 2 days ago, whatever, it didn't follow through, and a couple bars like that. I did send a chart there. Just looking at sure, is there a big weekly divergence on the Qs? Yeah, there is.
Weekly
I like weekly
divergence in
divergence.
what? Momentum?
Well, just take a look. There's your RSI 5 in the middle. I'm a five
RSI
guy. I'm
5.
willing to go
Ooh,
with the.
it's a little fast for me.
I'm always hey, this is a weekly 5. Come on. But yeah,
It's a
I
weekly
I use 5
5.
all the time. I I'm comfortable with 5. I've been
I'm a
comfortable for a
14
long
guy.
time
I'm a
with 5.
14 guy. But I respect the
Yeah, no, I
5.
hear you. Yeah. So look into the 5 because sure, there's a divergence there. So if we get a price bar that is a big ugly bearish week here, I mean, let's be honest, it's only Thursday. So if you get a bunch of selling and today ends up being sort of a big ugly week, okay, well I'm willing to respect that because we got to respect that. At the same time, it's a pretty legit breakout. I mean, so at the index level, I think going back to what you said about Apple, I find it tough to be interested in the indexes now, right here. When you're starting to have sort of things going on and bubbling up, and to get involved in the various kind of name by name level, I'm much more comfortable than trying to sit here at the index level. I don't know. It's just as the market matures, I think that typically is how I find myself.
Yeah, for me, front and center is the list of new lows, right? So the list of new highs peaked 2 months ago yesterday, right? And
Yep.
that the deterioration in market breadth has obviously played a role in our bearish positioning, looking to put on bearish positions.
Yep.
What we have not seen, to your point, to essentially confirm that, is an expansion in new lows, right? You're getting fewer new highs, sure, but you haven't seen the expansion in new lows, at least not yet. So I'm not looking at the new 52-week lows list because there's nothing going to happen there for a while. I mean, maybe, who knows? But 10-day lows, like start small. 10-day lows, 21-day lows, 30-day lows, 63-day lows. Like there isn't anything happening in any of those, right? So
Yeah.
to
I
your
agree.
point, if you see a big nasty weekly candle, I think that would coincide with an expansion in the new lows, right? We haven't seen that, at least not yet. So that would be next. So I'm totally with you.
Yeah, for sure. And I mean, we could sit here 12 months later if this market could just keep going. I mean, I think you and I both know anything's possible.
Markets can correct through
So
price or
we'll
time, David, right? Yeah,
absolutely be
that's right.
open-minded,
That's right.
right?
To not be open-minded is irresponsible. There's nothing wrong with being wrong. It's staying wrong that's the problem.
No, I agree. There's a lot of people that kind of get overly
Yeah.
convicted, right? It doesn't matter whether you're convicted about some stock or the market in general. It's just silly. I mean, there were so many people just steadfastly bearish
Yeah.
last year that would write me on Twitter. You're wrong. You're wrong. You're wrong. It's like, wrong
Right.
with what? Like
That's
price is
right.
going
That's
up.
right. That's right.
They're gone. They're gone
They're
now,
very
right?
sad. They're
And
very
and
sad.
and well, and they would say they weren't wrong, David. They were just early. Just wait. Just you wait, David.
For
Just you wait.
sure,
It's
David,
coming.
for
tell
sure.
everybody how being early and wrong is the same thing.
Yeah, no, totally. I mean,
Yeah.
anyway.
All right, David Cox, Raymond James, always a pleasure, sir. Thanks for coming on.
David, you're the man, dude. Come.
Well,
The chat says you need to come back more often. I agree. I agree.
Nice. Well, I appreciate the invitation. Always fun to chat with you. And yeah,
Great.
have a great day. Thanks
Thank
again
you.
for the invite.
Michael Now's very jealous out there that I was calling out David Cox as my favorite Canadian, tied for first with Justin Bieber. Michael Now's top three, Michael. Love you, buddy.
All righty. Let's do some earnings here quickly, and then we get to some other stuff. So I want to start with just looking at like the gainers this morning. I want to start with this Shake Shack report. It actually was up more. I think it's come off the highs a little
They're
bit.
still
But
public,
Shake Shack,
this company?
I know. Can you believe it, JC?
I cannot.
Yeah. Up. What are we up now? 17% this morning. Don't see that every day for Shake Shack. Anyway,
why is this
earnings
stock
per
publicly traded? Like seriously, for what?
Why not? This was a huge. This stock was a monster for years.
What?
Pre-COVID?
Wasn't?
Yeah, look at it.
It's a $3 billion little restaurant.
This thing was a beast.
Decent burgers though.
Anyway, 17% this morning off good earnings and good guidance. So I want to highlight that, and especially as we were up at this key level and we are now.
Dude, it's up 18%. Holy shit! Look at this thing.
That's what I'm saying.
All right.
That's what I'm saying. Okay, elsewhere in the earnings front, I know Steve wanted to talk a few of these as well. I'm going to rip through a few that were on my list. I wanted to rip through AppLovin, APP, up like 20%.
It's a great name for a company. It's a great name. AppLovin. It's a great name.
Yep. On their report,
what's the ticker symbol?
APP. Yeah, you know me. A beat and a beat for them. Again, another stock that was at an important level and is now blasting above that this morning.
20% today. Look at this thing.
Yeah. I know. There's a lot of big moves here this morning on earnings.
What kind of software are they?
I couldn't tell you.
Mobile app developers. Well, I don't know what they're talking about. It's way above my pay grade.
Here.
Doesn't matter.
I don't know. Yeah, mobile apps. That's not rocket science. Okay, from the upside to the downside, let's talk about Fastly. Down 21% this morning. FSLY on a sales miss and some bad guidance. Not good EPS guidance. They're going to lose money in the current quarter, and it's gonna come in. They're going to lose more than analysts thought, and they're going to lose money for the year on a EPS basis. That's what they're saying. So FSLY down 21% this morning on that report. Twilio down 12% this morning on their report. Not all good here. So Twilio's been beaten down though for a while. I think we have that Twilio chart somewhere. And elsewhere on the list, there was like a bunch more. I want to talk about this John Deere report. Do we have the Deere chart? If we do, can we bring it up? Not good guidance for John Deere. Okay, they are guiding that their annual profit will decline year over year. A lot of this is just straight up due to, even though they're raising prices.
Slide 2, Spencer.
Thank you. They're raising prices to try to combat it, but it's just lower volumes, really across their units, right? So they guided for sales to be down 20% in their production and precision agriculture unit. Sales will be down 10 to 15% in their small ag and turf business, and sales will be down 5 to 10% in their construction and forestry unit. So pretty much falling sales across the board for John Deere this morning. So not great.
Down 4% on the day. John Deere, $100 billion market cap. I figured it would be bigger.
Yep.
Right? Strazza, wouldn't you have thought that John Deere would be bigger than 100?
I think it should get bigger soon because it should follow Caterpillar to new highs.
I mean, you could have said that a year ago. Right? I think
Zoom
we did
out.
say that. I think we did say that a year ago.
Yeah, probably.
It didn't work. Remember, we had a long trade on Deere. It didn't work.
And what are we doing?
Contrary to popular belief, we get things wrong sometimes, right?
We're doing it right.
And
some people
Cisco.
thought the Sixers were going to win last night, and they were wrong.
Cisco
too. This report was it's Cisco, so What do you think?
What a piece of shit this thing is.
They are doing layoffs. They're cutting 5% on their global workforce. But I mean,
Strazza, can you just out of curiosity, why do they suck so much? What are they doing so wrong?
They're too big.
200 billion is too big?
Oh, they got too big and then they stopped innovating and everybody passed them. Same as Intel. You know, I could tell by the chart structure that that's what happened here, right? We've seen a lot of this coming out of the dot-com bubble. And then you see other ones that broke out of the dot-com bubble base 5-10 years ago. In the case of something like Microsoft, they kept innovating. I think that with Cisco, it was really just a matter of bad guide.
Yeah, the guidance was not good.
So that's just it. They got too big and stopped innovating. That's the answer.
I mean, yeah.
Like, just think about that space and how many huge winners there are, and this thing just perennial loser.
Talk to me about some of these cloud computing names, though. Let's talk about some good-looking charts. Like, I think Fastly reported, Frog.
Yeah, we talked about Fastly.
We
did not talk about. We did not talk about Frog. Yeah, we just gave the Apple Lovin' some lovin'.
Is that not the best name for a company? It's such a great name.
Did they beat?
Yeah, Apple Lovin' beat, Frog beat. What was the third one we just discussed? Fastly missed, but those other two software stocks.
Hey, App Lovin', breakaway gap? Yeah? Is this the gap and go in the App Lovin'? Love to see it. Looks like Net did last week. Really nice. Fastly missed because that base was shaping up. Bummer for Fastly. Look at that base ready to go. This thing just got Snapchatted.
Hey now.
That's a verb now?
That's a verb now. Yeah. Can we get Snapchatted? Can we get slide 2 up here, Strazza? I'd love to hear your thoughts on this. You've been all over the cybersecurity. We all have. You probably pounded the table more than any of us.
Did that special report.
As far as I'm concerned, mission accomplished. Right? This had been the target. This was a target for a long time. We have now achieved that target. Now, this is not SPY or QQQ or Dow Jones Industrial Average. This is a thematic ETF. Yeah. So when you look at the components, who knows, right? So we want to take this particular index with a grain of salt. It's kind of like an ARK ETF, right? However, target hit, mission accomplished. What next?
You know, this group, I don't think got the same loving as semiconductors and home builders. And, you know, we're always shouting out building products. This one, it's on the same list as those leaders. It's been so good, still strong. We're continuing to see breadth expand, more and more great chart patterns coming out of this group, whether it's Palo Alto, CrowdStrike, Zscaler's been really good, Checkpoint, LDOS, that Leidos. You know what they do? The TSA stuff, the TSA machines. We got to stand like this when you're going through the airport.
Oh, I was wondering I've wondered who makes those.
Leidos. So it's LDOS. We just wrote about that one, I think, last week. But that's the point, right? In all of our bottoms up scans, you keep seeing names from the same industry groups pop up, and that's how you know. That's like the confirmation. Oh yeah, this group's definitely a leadership area. Cyber's been that way and just continues to be that way.
Well, you were. Well, you stepped away when David Cox was here.
And you know what it was? I didn't want to miss that. I was on the phone with Schwab. Shout out Charles Schwab. They're just the best. Just like calling to check in, like, you know, talk about the Roth this and your account here, and they have a partnership with my broker too. So they're talking about like how my mortgage is changing. Just wanted to talk. It's fantastic. So good.
Oh, okay.
For them.
Before we bring Kenny on,
I got no problem with Schwab. Shout out. Talk to Chuck. That's what they used to say.
I just talked to Chuck.
I doubt it. All right.
And he was
before Kenny. One chart before Kenny. Slide 2.
Two things before Kenny. Yeah.
Slide 2. This is the one that Mr. Cox brought up. This is DSGX. That he says it's an industrial because it's in the logistics business, but it's a software stock.
Okay. Hey, either one works for me.
You know, there's a few of those, by the way. Is it ROK? ROK is one of those.
Yeah, because there's a lot of AI and like it's really robotics, right?
Yeah. But ROK is actually listed as an industrial.
Well, Rockwell.
The
on
other
Main
one is
Street.
not. This one's not listed as an industrial.
Rockwell's a big one. There's another one. God damn it. Hold on. Let me see.
Colin talking about Fidelity customer service, also excellent. Totally agree. Totally with you, Colin. Yeah, agreed.
Well, there's only 2 games in town these days. There's Schwab and Fidelity.
That's probably right.
And
pretty much
Sam's
it.
talking about Vanguard is the best too. I've never spoken to Vanguard. I don't think I've ever done anything with Vanguard, so I can't attest to that. But Fidelity for sure, Schwab for sure.
Yeah.
AP
right.
was the other.
I keep calling OpenSea and nobody answers the phone. So
keep trying, JC. Keep trying.
So
yeah.
So is that it for earnings? We did them all?
Yeah, well, we ripped through. I mean, no, we did not do them all, but we ripped through the ones that I thought were important.
Are we going to talk about? Are we going to talk about these spooky recessions in developed markets outside of the U.S.? Don't you want to put that? Air check.
Yes.
JC?
Let's do that after Kenny. Let's bring Kenny on for like 2 seconds, and then we'll do that. And then
remember, Strazza, for most of us, recessions are a choice.
I want to talk about this 13F too.
That should be your SEO for today's titles. Recession in Japan. Da, da, da.
Well, yeah, maybe. All right, Kenny, you're coming on.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Kenny Glick in the house.
What's up, kid?
How was Super Bowl, bro?
Super Bowl, I'm still hungover from the U2 show. I was there for a week. So I'm thinking a week in Vegas. I got a three-week hangover now at 52. Yeah.
Dude, a week in Vegas is too aggressive, man. I've done that before. It's not good.
Not good.
So you did the Sphere then?
I flew in Tuesday, went to see U2 Wednesday. I went clubbing Thursday, woke up for the Super Bowl. And
hold on. Stop. First of all, how was the Sphere with the U2 concert? Was it crazy?
It was phenomenal. My buddy is in the fan club, so we got right in that section that everybody covets, right smack dab in the middle, 305. That's so awesome. Extraordinary. I thought it was going to be a little bit more like the planetarium, where I'm just feeling like I'm floating all over the place. They didn't want to kill you with the visuals. It was a great addition to the show. Yeah. They brought it down to just seeing U2 for a while. If you love U2, So Cruel was amazing. They did a little acoustic set, and then bam, you're blasted back into space, and it was just you got to go see it. I'm going back to see The Dead in July if anybody wants to come sweat it out with me at 105. So I'm going back in July.
Yeah, it's aggressive, but you're inside, so it's all good.
Yeah,
very cool. And the Super Bowl, the stadium is sick or what?
Sick stadium. It was just a weird thing, not being having a true rooting interest. You know, I had money on Kansas City. It was kind of a tame crowd, and I didn't want to go too nuts because I'm sitting with Tepper's crew. I don't want to be that guy. I brought a crazy pink hat I was going to wear so everybody could see me. I didn't really want to do it. I got a little shy. Me being shy was weird, but phenomenal. I'm in the 5th row off the 20, and it was just really, really exciting to be there. But then at the end of the game, it actually kind of was just hushed. Everybody was so nervous.
I bet.
And I was like, this is the overtime to the Super Bowl, and I'm like the only one who's going crazy. How
was Usher? Usher was good too.
It started off great, and then it kind of faded away. But the end was awesome. We're dancing again. I'm the only lunatic dancing.
Kenny, it's a very corporate crowd, right?
Yes,
it's a very corporate crowd.
Corporate crowd.
Yeah. So not. All right.
All
right. What's on your mind here?
What are we doing here? So is I know you lean perma bearish, but are constantly buying, which I love that about you.
Yes.
Let's stick to things that have a market cap that our lawyers would approve of.
Let's take a look at NNOX. We just crushed this thing. This is a stock I owned from last year. I have leaps on it, and actually I have a shot of making my money back. I caught this move last night, and then this morning I walked people through it because when a stock pops and drops the night before, and then it drops that pre-market session, all we're looking for it to get that momentum back. So once it broke over the VWAP and then broke over that $10 spot, we started buying it again, and we just looked for it to get back to that $12 area from yesterday. So we caught the 10 to the 12, and then once it broke 12. We started thinking, hey, maybe this thing gets back to 15. And then we got close to the 15. We started selling up there. And luckily, a little luck, and then it cracked right back down to VWAP. Looking to do it all over again. NNOX, apparently they got, I bought it because Johnson & Johnson invested in their MRI machine. Apparently Nvidia just bought a little bit of it. So, it's an interesting play. But since we were here, all those stocks that I was in had amazing moves. Hopefully you guys had the ARM at 70. Hello, 120 target.
What a
Awesome.
beast, dude.
My little Captain stock. I know that one's a little too small for you. It was a $3 stock, now $7.50. CCC at $4. Now it's at about $8. So, and of course, Strazza, loving the path. I had the 23 calls for 98 cents, banging them out at $4 while I was in Vegas, paid for the whole trip. So, it's just, this is the most amazing market. And again, I've been trading since 97. I thought 99 was something. This is the best. This is the best because we haven't gone really as parabolic as everybody thinks. And everybody who still thinks we're going to crash, why? Why are we going to crash?
Some stocks went parabolic, but you're not seeing it broad based like 99, like you said.
Right. And stocks like Lyft that woke up the other day. I'm in Lyft now. Why not? After what Uber did, I'll take some Lyft. Again, from $15, I don't care if I chase.
Strazza, any thoughts? Strazza's taking this personally. Strazza, thoughts there?
I'm not taking it personally at all. Yeah, you could trade it, but it's not anything like Uber.
No. Now, if it hits 1750, you're probably going to be done right here. So 1743, we just sold some and looking for 1750. We're already rocking. Still got the hood. This thing just does not want to break out, but one of these days maybe it does. Just like the path trade. If you look at Sentinel, the big S, every stock I own has the same exact chart because the results have been the same. So I'm just keep buying. I'm looking at ADPT now. It's another dog that's trying to come out of the dungeon. So Path paid us, the Lyft paid us, the Hood paid us, the ARM paid us. I'm just looking for that chart pattern to keep, showing up. And that's why NNOX last night, I was like, oh, look who's back. And, that's where I'm at right now.
I love that you're trading a ticker with one letter in it. I didn't have that on my bingo card for this morning.
No, but I think Strazza gave me that one a couple of
S, but it's like a software stock. It's the kind of stock that you would expect to have 5 letters. So
I like how he calls you Strazza.
Kenny, I love what you're saying about this is the pattern that I'm buying. And so aware of it. And the reason why is simply because I've seen it before and this is what it looks like now. And I expect this one to look like that in the future, right?
Right.
He's going around Asia.
It's like he's sitting in our meetings, Strazza.
No, it's so good though. I was going around Asia, literally giving that presentation last summer, saying this is what the charts that you're buying should look like. Here are 4 characteristics, right? The base is breaking out. You have some sort of line in the sand. Momentum is bullish. 200-day moving average is curling higher. And the last one I said, because I want to know if you agree with me, there's so many of these nice bases that are resolving higher. You can't buy them all.
Right.
So we need a way to decide which ones of these bases are better than the others, right? And the way I think we can do that best is look at the relative trend. And the best ones, if you look at Path, not only is there a base on absolute terms, but Path relative to the S&P 500 also resolving higher from a trend reversal pattern that looks just like the absolute chart. And then that tells us this stock should be a leader in the future.
Yeah. You had an amazing list. When you gave me that list about 2 months ago, half the stocks I trade were on your list because obviously we're looking at the same thing. And again, one of the lessons I learned, again, from being a perma bear and getting my ass kicked from shorting the Qs, I'm still kind of digging out of a hole from a decade ago, just getting lit up. Being bearish keeps me focused. And I now see the mistakes I made 10 years ago. And I'm like, oh, this is where I would normally reload the dumb short. And this is where it explodes 20% more in my face. Now I'm the 20% guy making it on the upside. That's why I'm liking this Lyft and the Hood lately. They're finally coming out of that little base. But yeah, the path was another interesting play because normally I don't buy options going into reports, but we still got a month. So when you buy an option before the report comes out, they'll sometimes increase the value of the option artificially because you're getting closer to the earnings and you're still going to make money on it. So it was an added benefit that the stock popped 4.5 points.
And I think it tends to move with these cloud computing names. I don't know exactly what they do. I really don't care. But it's moving in sympathy to other good cloud earnings, whether it's Datadog or Cloudflare or today the AppLovin, right? So it always makes me feel good when I see the competitors or the peers of a company I own reacting positively to earnings. I'm like, oh, okay. And maybe that's good news for us, but we'll see. When are earnings?
I mean, this is just a hard market to not to want to. It's a hard market to be long and wrong. I mean, come on. I mean, every dip's a buy on majority of stocks. You know, again, I always, and again, with you and the lawyers and all that, I always tell you that some of these stocks are garbage. I mean, these are some of these stocks.
You and the lawyers and stuff.
I called the company on that CAPT. I think I might have spoke to CEO. I don't know. I'm not even sure. And they didn't call me back. That's why I can't fall in love with these small cap stocks that I'm not even sure of are real companies. Path, I got no problem to load up a little bit. And by the way, Lyft headed to 18 now. Let's go.
But hold on. The Nano X that you mentioned, right? Speaking of small caps, what's the cap on this thing? I'm trying to check and it won't even come up. Oh geez. Anyway, we're only talking about because it's in the news site, not because of Kenny. You were in this before the NVIDIA 13X?
Oh, I was in it last year. I'm still in it. I bought April Leaps. Yeah. Well, I bought it because Johnson & Johnson invested in it. Johnson & Johnson took a 7 or 8% stake in it. And, you know, again, I'm also a little claustrophobic. When I go into an MRI, you know, you're in the little tube, bum, 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 bum. This is an open MRI, and apparently you could see into your soul, too. So I was like, all right, I'll buy some Leaps on it. Obviously, I'm getting crushed. I bought $20 calls. My cost average is around $4 because the stock was rocking. Yeah. And I went out a year because when I want to own something like the Rambus or Path or some of these other stocks, I just go out about, you know, I try to find the longest dated option I could find that's fairly valued. And that's what I'm in. So if, when I'm wrong, we all get stocks wrong. Obviously, NNOX was wrong. I have a limit to what I'm going to lose. And that's basically how I invest. But mostly, I still love day trading. Yesterday, we crushed it on an AIG short. Easiest trade of the day. Just absolutely annihilated that stock. As soon as it rolled over, that's my favorite play. Earnings gaps that fade through the VWAP. And you just buy those weekly puts. We had the $72 puts for 65 cents, banging them out at $1, $1.50, $2, and $2.50. So awesome day. Pays for the lift.
Kenny, are you're not trading diamonds anymore?
I am not. I'm kind of getting off the cues actually, right? You know, because now I'm just going stock specific during earnings season. You know, loving my Palantir, traded every day. You know, obviously Lyft, and you know, I was crushing on some Snap the other day, and you know, it's just so active, this market. This is, like I said, 1999 on steroids. I like this market so much better, and I just feel like there's more flow here. It's just so much opportunity that it's bewildering at times. And like you said, what do you focus on? I just focus on the 5 or 6 stocks that are in the news, like, you know, Lyft for the next couple of days will be my baby, NNOX for the next couple of days. And then, you know, obviously I've been looking at whoever reports next, and, you know, then we go on. Like AIG, we traded it yesterday. I'm not even looking at it today. So
What'd you do while you were in Vegas? You just didn't trade?
I sold some Path just to pay for some of the trip. And, you know, I had some Palantir. I sold some of that. But yeah, I had high hopes to open up the laptop, and that didn't happen.
How long has it been since you were in Vegas?
When did I go to Vegas last? I don't know. I think it was with the family. I was going once a year for a while there, but I'm going right back to go see the Dead in July. So
God bless.
I think I might leave it right there. You know,
hey, Kenny,
I'm going to start putting on my Velcro shoes and just go to a show and a dinner and bed at 10 o'clock.
Vegas for a week is tough, man.
Bro, I'm coming out. I'm still coming out of the coma now. Yeah, it's
years ago. I remember years ago I was in Vegas for a SALT conference, and I was literally leaving that night. One night I was leaving. I was with Jeff Hirsch actually at a club, and my boy texted me. He's like, "Wait a minute, you're in Vegas?" I'm like, "Yeah." He's like, "I just got here." I'm like, "Oh, I'm leaving tonight." He's like, "No, you're not." So I didn't. I stayed another 3-4 days. I came back. I was dead, man. I literally died.
Oh yeah. Yeah. Oh man, Saturday I was kind of just sobbing in my room. I'm like, how am I gonna get up for the Super Bowl?
It gets depressing. Like, you know, when you're like in Vegas, hungover, and like it's dark, and then you open the blinds and the sun comes in. Oh,
walking through Vegas in the daytime.
Anything more than 2 days. Anything more than 2 days. Can't do that in 2 days.
You start like
2 days
you know, looking at yourself in the mirror and being like, where has my life gone?
Yeah. Yeah.
All right.
Saturday,
Kenny,
I was having
Kenny,
I was having basically like therapy sessions to myself in the mirror.
Yeah.
What have I done?
You start questioning life decisions.
Yeah.
Yeah.
But the Super
Kenny,
Bowl made it
a
all
birdie
worth
tells
it.
me that you're doing a stream tonight. Is that true? Are you doing a
Yeah,
video
that's why I
tonight?
wanted to come on. We're having your buddy Dave and Jay on. They have something that interests me. And again, I love
Who
anything
are
about
Dave and Jay?
what?
Who are Dave and Jay?
I don't know who Dave and Jay are.
Who are Dave and Jay?
Like, these guys I've been talking to about, maybe doing some partnering, something like that. So,
Yeah, well, they have
yeah.
a institutional scanner. So basically, they're looking
Yeah.
for institutional buying opposed to retail buying, and they have a scanner that spits it out. And then within the first hour of the day, it spits out a couple of ideas for you of what is the most institutional buy of the day. And I love institutional buying because that's what makes the VWAP work. So again, we're gonna have them on the show tonight. And guys, if you're listening, send me an email right now at 8 p.m. tonight. I'm gonna have a couple of guests on. It's free. Just show up. You just got to email me, KennyGlick@AOL.com. That's right.
Wow,
Kenny
AOL.
Glick at
KennyGlick@AOL.com.
AOL.com. I'm that old.
Crap.
So Kenny Glick at AOL, I'll send you a password, or I'll make it even easier.
AOL.
Go to hitthebid.com.
What is that, dude?
Yeah, I'll make it even easier for you. Go to hitthebid.com, click the login button, put your info in. The password will be scanners.
Wait.
SCANNERS.
There's the email on the screen. Email Kenny.
All right,
Kenny Glick.
That's too confusing for you. Gotta press a button.
Dude,
Okay.
that is
Oh my
crazy,
gosh.
man. AOL.
So yeah, we're gonna have them on. And
I don't know if I
generally-
respect you more or less now. I can't figure it out. I don't know.
Well, I have other email addresses, but I love that one. By the way, Lyft, almost 18 people.
All right. Thanks a lot, Kenny.
All right, brothers. So email me. We'll be hanging out tonight, and it's called the Schmooze. We usually talk about earnings plays and what we're going to do the next day. Usually all about options. So we have our guest on, and then we have a couple of cocktails. It was born out of COVID. So by the way, sold to you. Lyft done. Have a nice day.
All right.
Adios.
Goodbye, Kenny. Dear Lord. I want to bring on Sean. I'm bringing on Sean. I know we got a lot we didn't discuss yet, but we got Sean here, so you're coming on now.
AOL.com. I missed the boat on that one, I guess.
Wow. AOL. That is very aggressive. John, when was the last time you were in Philly, bro?
Philly, circa 1998, perhaps.
Wow. Philly's a cool town. I like Philly.
Every
time I'm there, I'm only there for like a day, a night, short spurts. Great time, great steakhouse basketball game last night. Fantastic. I said it before, and I'll say it again with you here because I think it was disrespectful to say that without you here. Philly fans aren't that bad, man. It's the Buffalo fans that are the worst. Philly fans get a bad rap. They're not bad.
You are a sample size of one because there's only one Miami Dolphins fan out there. Yes, Miami Dolphins fans don't like Bills fans for good reason, but the rest of the league, you ask around.
Oh, they don't like us. They don't like me.
Bills fans.
They don't like me. So what's up, Sean? What's on your mind? Shorting a little Hormel. We won't necessarily go into the details, but looking for a lottery ticket trade here. Maybe it gets slammed next week. Maybe it doesn't. If we're wrong, we lose 15 cents. No big deal.
Look, Hormel is just another one of those trades that we've been putting on that we've been kind of dripping into over the last couple of weeks as, if nothing else, just hedges for the portfolio. I know you were banging the drum about getting bearish last week. This is not necessarily that. For me, it's, look, I'm sitting in some, and this is not a brag, but I'm sitting in some big winners on the long side right now. I'm in positions in Uber. I'm in positions in Taiwan Semi. I'm in, what am I in? I'm in IBM. I'm in RSG and Snow. I mean, these are trades that have all worked really, really well. And so me dripping into a lot of these bearish trades right now, if nothing else, it's just adding ballast to my portfolio if we do get the rollover that perhaps might be coming. It seems to be looking less and less likely as the days go by, but that's fine.
I want to stop you right there. I want to stop you right there because this is something that Sean has really instilled in my head over the years, and that is when making decisions, portfolio decisions, is looking around at the rest of your portfolio. And it's not just, oh, we have all these longs and they're working so well, let's put on some shorts. That's a good example, but it's also, hey, we're really long volatility. Let's put on a delta neutral trade, right? We have too many expirations in June. Let's look for an expiration that's not June. Can you talk a little bit about that? Because I think that's a really important point.
Well, yeah. One of the things that's unique about options trading is that we can diversify not just across instruments, right? Like, yeah, I could be long Apple and then short Microsoft, right? That's diversification. But you could also diversify across time frames, across strategies, across credit spreads versus debit spreads. There's a lot of different ways that you could diversify that different strategies and different time frames will react differently. The market might be doing X, but you have 3 positions doing X, Y, and Z, right? Like it's a good way to diversify that way. And, going back to what I was saying before about how I've been adding a bunch of bearish positions, if nothing else, to diversify more my portfolio. I want to highlight that, this is a little bit of a shift for me over the last, let's call it 4, 5, 6 months, where in the past, if I'm sitting in some positions that have worked and are working well, for me to take risk off, my go-to move was, okay, maybe I'll sell a little bit of those trades, right? Sell them down, take a little risk off the table, maybe sell half of my position, that thing. Nothing wrong with that, JC. But looking back at all my trades over the past, decade, let's say, following that type of mindset, I've noticed that, man, I've left a lot of profits on the table. Trades that I was in that were working that had there's no valid reason for me to trim other than my own discomfort, right? And so I said, maybe instead of taking profits off the table on positions that are working, let's keep those on and then look for other positions that might offer better diversification so I don't miss out on that next leg higher. And boy, am I glad I did that, because the old Sean, JC, probably would have taken a lot of profits in, let's say, Uber about a month ago, about 6 weeks ago. But I haven't, and I'm very happy that I haven't.
And it gets back to being able to sleep at night. I know you and I had a conversation a few days ago about this. Raising stops, and having that plan, sort of fulfills that role as opposed to taking half off the table. Also, a couple days ago, I was on the phone with you, and I think it was on Monday, and we were talking about how my issue at the time, I don't think right now, probably still the case, I'm not short enough, right? I don't have enough bearish exposure. And I could say that right now. I could still say I don't have enough bearish exposure, and I'm not literally having trouble sleeping at night, right? But kind of, but to a lot of the points that we've been making, we have enough bearish positions for the evidence that we've gotten. If Apple breaks 180, I'm going to short the shit out of that. And if we get an expansion in the new lows list, we'll add to bearish position. So I'm comfortable this very second, I suppose, in terms of how how much short exposure we have, but only because I know we're going to add to that exposure if we see a couple of things.
Right. You hit upon it that we discussed in our conference call, or our internal conference call yesterday. Apple below 180 is definitely meeting, something we're paying attention to.
Team meeting.
What's that?
Team meeting.
Sorry. What did I call it? Conference call?
An internal conference call.
They're all the same to me. But yeah, Apple below 180. In fact, let's talk about that for a second, because we talked about how Apple below 180 is an important level for us. Now, that doesn't necessarily mean that Apple will be our vehicle to get short if it's below 180. I mean, yeah, maybe that would be a good trade, but Apple below 180 means a lot more to us. It means, there's probably other areas of the market that are in much bigger trouble right now. There might be better alpha in some other trades. But once Apple gets below 80, I think as a team, we all agreed that we would definitely get a little bit more aggressive on the bearish side, looking for bearish setups.
I know Steve is been very patient today with a couple of things he wanted to get to, and we haven't got to them. So, Steve, if you're here,
well, where is he? Get in here, Strazza. What did Kenny call him? Strazza?
Do you want to do hot corner? I think we should do hot corner because there was a 13F that I know Steve wanted to discuss. So let's do that now, and then we can do recess after that.
Hot corner. So hot right now.
God. All right. 13F season. This is the time of the quarter where financial institutions tell us about all the things that they owned 45 days ago and might or probably don't own today. And you see a bunch of headlines about it. And most of them really don't matter. The one that really has my attention today is the first ever 13F filing from the market superpower that is NVIDIA. This is what happens when you're printing money, selling the
So hold
AI.
on, time out. NVIDIA is filing a 13F because they're making so many buys. Why? Because they're buying the companies that they know are going to crush because of them.
I think it's once you have public investments over 100 million.
No, but what I'm saying is they know that they're going to spend so much money with XYZ company on whatever that they're going to invest in that company also. Is that what you mean?
I mean, they're going to invest in companies just like anybody else. If they think
Are you hinting at insider trading there?
No, but it's legal inside trader, right? I don't know anything about chip making. I'm making this up. So let's say I'm a chip maker, I'm NVIDIA, and I have to make like a motherboard or whatever, and I need doohickeys for the motherboard, right? If I know that this doohickey company over there, I'm gonna sign a monster contract with a doohickey company because I need trillions of doohickeys for my motherboard. I can invest in that company because the stock's going to go up, and I know it is because they're going to sign a huge. Do I have that right? Is that about right?
Yeah, no. Of course.
No, I just wanted to ask. I don't know if I'm right. That's my assumption here. But that is a correct way of seeing this.
Yeah, but the bigger point about it is most public companies aren't filing 13Fs, right? Because they have enough cash for their operations, and if they're lucky, they could pay a dividend and maybe even buy back some stock, right? The best ones, like go look at Google's, for example, they're just taking shots, right? Putting on some riskies because they have the cash and they could do that, right? So that's really what this is to me in the video. Okay, so let's just run through them real quick. RXRX, 76 million. ARM Holdings, 150 million. What's awesome about this, look at the average price that they're in at, about $58 a share. They've already doubled their money in this one, so good for them. And then Kenny was talking about the NNOX. It's tiny. It's tiny, so I don't know what this big move is for. And then SoundHound, which is interesting. It's like a voice recognition AI speech platform. So that one stands out too. Also small though, what, 3.7 million? So RXRX and ARM, sizable, stand out. And I think the reason these stocks are getting so much love is because the simple fact that NVIDIA has a ton of cash and is looking for stuff to do with it. And these are probably starter positions.
I think Sound was up like 90% this morning at one point. Something ridiculous like that. I mean, this is small stock, but yeah.
Just say the name of that is SoundHound. I love that name.
Small stock and even smaller investment, right? I mean, less than 1% of the outstanding shares. I mean, ARM too, even though 150 million sounds like a lot, it's nothing. This is a large cap company, so like 0.2% ownership, really nothing. RXRX, 3.7%. Wish we would get to 5 because I would love to get some more timely information about these investments. If we get to 5% on that, we'll at least get some 13Ds.
Sean, start. Sorry, Strazza, but I know we're the show. We got 1 minute left. Start looking at the options chain on the on that Apple. It looks fucking terrible. So does Google. So I might want to be shorting Google too.
All right, we'll keep an eye on them. Google's
not as clean. Apple's a much cleaner chart.
Yeah.
All right, let's do some recess and get out of here.
Strazza's like, I'm not. Mine's quick. Shout out Philly. Shout out Barclays Prime. Great steakhouse. Sat right at the bar. The sommelier is the man, by the way. So ask for the som when you go. This guy, he's Brazilian, dude. This guy's crazy. He's the man. So Barclays Prime, Philly. Go check it out.
All right, I got a quick recess. I'd like some crowd participation here. People get into the comments there. I dropped a little idea in the internal chat the other day, a little feature request for the show. I think it would be great. I think we need to institute a penalty box into the morning show where Strazza has a button whenever he needs to mute JC because JC's going off the rails like he tends to do. Strazza could put JC in the penalty box for 30 seconds. I think we need to bring that into the show. What do you guys think? Let's hear it in the chat.
If I deserve it, put me in, coach. Put me in.
My current method is I just take myself off the camera. I sit down. I go.
You can see it in his eyes, like his eyebrows are like his eye rolls, like from the back of his head.
I get out my.
He can't help it. He can't help it.
I do a 2-minute breathing exercise, and then
my man Strazza deserves to be heard, and he gets cut off too much on this show. He's a smart guy, maybe the smartest guy in this room sometimes, and he gets short shrift. So I think we need to give him a little power.
Ben and Michael do something similar like that on Animal Spirits. It is quite fun.
All right, I like it. Penalty box.
Steve, what do you got?
I got 2 things really quick. Coinbase, JP Morgan, get your shit together. Wall Street has gotten this stock so wrong. It's downright embarrassing. Just stop paying attention to anything that they say. I guess you got the upgrade from JP Morgan today from sell to neutral, right ahead of earnings because they're worried they're going to get their faces ripped off even more. Maintaining a price target of 80. That's more than 50% downside from the current price. Sounds like a great short to me. Why it's an upgrade, I have no idea. If I cared a little bit more, I might read the report and figure out what they even said, but that would be way too big a waste of my time. And then one more that I have, Uber, just good for these guys. They continue to do everything right. You know, we were talking about just the past few weeks how their cash flow situation, they're going to have to pay a dividend soon. They one-upped me, and instead of the dividend, went for the buyback. A lot of talk about Lyft today. Uber's the monster in this space. They just announced a $7 billion buyback that's larger than the market cap value of Lyft. Don't talk to me about Uber and Lyft. It's not a contest.
Can we talk about how Strazza's recess is more stocks, more charts? Come on. Can't get enough.
I didn't get anything today. I got a lot to say here.
I said at the top of the show we got a lot to get to. You guys were like, "Oh no, we don't."
Well, now we know how Strazza.
All right, well, listen, we gotta go.
All right. Listen, it's Thursday. We got options jam session with Sean at noon. Chart request live with Strazza and Pat at 1. Stay tuned for that. Thanks to our guests. Smash the like. Go make some money. See you guys later.
Adios.
Peace.
I can't take no loss.